Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on uranium today. We are joined by Latitude Uranium CEO John Jentz, and this is the company formerly known as Labrador Uranium. So during today's webinar, he will provide an overview and outlook of the company. Then we will take some questions. You can type your questions in at the chat box at any time, and we'll get to as many as we can. But before we kick things off, first we need to discuss the fine print. During this Latitude Uranium webinar, forward-looking statements may be made. I direct listeners to the forward-looking statements outlined on page 2 of its corporate presentation. That can be found on the company's website, latitudeuranium.com. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on Latitude Uranium. With that, I now turn it over to John to update the audience on the company. So, John.
Dave, thank you for that, and thank you for the Red Cloud team for hosting the webinar today. Glad to be here. Okay, standard forward-looking statements. We'll take that as read in terms of overview. In terms of investment highlights for Latitude, in terms of fueling net zero, the nuclear side, in terms of uranium being the best and cleanest source of energy. You know, if we're going to try and decarbonize the world or get to any of these net zero goals on a regional or global basis, uranium is got to be part of that solution. Everyone's aware of the supply deficits in terms of lack of near-term projects and the glowing global needs. In terms of what we have at Latitude, we have two great assets, both in good jurisdictions for people that aren't in Canada, the territory of Nunavut and Newfoundland and Labrador. Both of those and in Canada, more generally, consistently rank in things like the Fraser Institute fairly highly in terms of investment quality. And Angilak by itself, you know, at 1,000, just a rough numbers to give you a sense that it's got some globally attractive grade at 0.69. You know, if you put 1,000 ton a day on that, it would be, in terms of size, it would be up in the top assets globally. And in terms of Canada and the territories and provinces, permitting and investment impact benefits agreement, fairly clear and tested. In terms of who's leading the show, in terms of management and the board, very focused on operations and drilling and growing the resource. Both broad industry within the uranium industry and with more generally mining, across all management and board, and in terms of looking for benefits for all stakeholders, and in terms of having a collaborative, supportive culture with an entrepreneurial mindset. In terms of nuclear and fueling net zero, when you look at this is my little chart I compiled from a bunch of different sources. You've got the top three there in terms of global energy sources and global energy uses. You've got the three biggest buckets in terms of heating, transport, and electricity. And on the left, you've got the sources of energy, the top three being the fossil fuels, oil, coal, and gas, electricity sort of in the middle. And then you've got the renewables in terms of nuclear, hydro, and other renewables grouped in there together. And, you know, I think everybody realizes we're trying to get all of that fossil fuel driven activity down into that bottom box, and you know, hydro is going to play a part, but nuclear is going to play a big part in there. In terms of our projects, you can see Nunavut and then Newfoundland and Labrador. In terms of Nunavut, project's called Angilak, fairly big at 685 square kilometers. There's a historical resource there of just a little over 43 million pounds. Again, at a globally very significant grade of 0.69. In terms of this year, we're going to be spending about 8 million, and some interesting byproducts in terms of moly, copper, and silver, and we'll get into all that. And over in Newfoundland, Labrador, the CMB project stands for Central Mineral Belt, the CMB. It's even larger, around a little over 1,500 square kilometers. Again, with some historical resources at two properties called Moore Lake and Annan Lake. And this year, we're looking to spend 4 million. And interestingly, one of the things we'll be looking at, we'll talk a little bit later, is both for uranium, but also if there's any IOCG potential over there. Corporate snapshot in terms of capital structure, just a little over 200 million shares, some options and some warrants, all out of the money at this point. The share price is in around 25 cents. I think it's around 23 currently. Last time I checked, market cap of around 50 million. Cash in the bank's 15. So everything is fully funded in terms of this year in the program. And in terms of who's covering us, it's Dave at Red Cloud with a $1.35 target. In terms of management and board, I'm sure there's people that a lot of recognizable faces there. Phil Williams. Phil and I have known each other. We used to work together at Westwind back in 2005 or so. Myself, Richard Patricio, CEO of Mega. Justin Reed, who's CEO of Troilus at the moment. Used to be the uranium analyst at Cormark back when uranium had a big run. There's Bridget. Jim Paterson came over from Valour. He's the CEO there. And Rob Carpenter is a Valour nominee, just joined. And interestingly, Rob's a great addition. He worked for Kaminak back in the early 2000s at the property when they owned it. So very valuable to the company. In terms of management, the technical team, that's the team based out in St. John's, Newfoundland, so close to the CMB. Greg's our CFO. Nancy is our VPX. Previously experienced with, she worked at Kigavit and Nunavut, so she knows the area and she knows uranium fairly well. And rounded out by the team in St. John's. Now we'll go into, we'll look at Angilak a little bit more in depth. In terms of Nunavut, you can see there, we're in southern Nunavut. The red star, that's obviously a picture on the left in the summer. Fairly arid, flat land, the occasional outcrop here and there, basically no trees. And so, for doing things like airborne surveys, you can get 10 to 20 meters close to the ground. It's fairly good that way. Really, the work season there is, although people like Agnico, who have the big mines Melee down in Middlebank, they do produce year round in terms of surface geological work. It's really mid-May to sort of mid-October, so it's a sixth-ish month season there. And in terms of permitting, Nunavut, when they formed in 1999, did a very smart thing. They formed the NTI, the Nunavut Inc. It's a corporation, and as well as many other things it has on its plate, they put all the subsurface mineral rights on Inuit loan land in Nunavut into the company. So they're all administered by one body, very professional, very responsive, and very commercial. And the KIA as well represents the interests of all people living in the Kivlik region, which is where we are. In terms of with the property, you can see it on the left. It's around 40K wide, about 20K high. Again, 685 kilometers, and not quite $100 million has been invested on the property since the mid 70s. And you can see a lot of the black stars there in terms of the target. You can see the historical resource in yellow in the central top. Our focus, although the property is very prospective in terms of areas and things to follow up, our short-term focus is going to be on resource growth. The resource has been at 43 million pounds since around 2013. So what our shareholders and what the market is telling us is that they want to see some growth. And that's going to be our that's focus in that top yellow part. And when we zoom in a little bit on that part, you see what we call, try and make it simple for A, B, and C. B is where the historical resource is, the 43 million pounds at 0.69, 2.8 million tons. And to the left of the existing resource and to the right of the existing resource, around 5 kilometers each, around 3 kilometers high. Altogether, it's about 15 kilometers long, what we call the LAC 50 trend. And I think that we can deal with resource growth for at least the next couple of years, just on that property alone. You can see the historical resource there in terms of, and then with the moly and the copper and the silver as well. On the bottom, you can see a modified long section, what we call the western extension, the main zone, eastern extension. There's a little bit of break in between, about 2 kilometers. And then on the right-hand side is what we call the J4 upper and lower and Ray zone. You can see the grade. Red is good. Red is over 1%. So it gives you an idea of the grade distribution. And all of this starts at surface and goes down into about 350 meters. So very, very open pitable, if that's one of the mining scenarios that we choose to look at the right time. That's all, but it's about 5 kilometers long there. And when you look at the 2 kilometer gap, you may ask why, is there something going on? Well, when we flip over to the next slide, in the real world, in the foreground, you can see the J4 and upper and ray zone in the black, and in the foreground with a yellow star, that's the eastern extension. The 2 kilometer gap in between, well, you can see it's a lake. Obviously in summer, when it's a lake, it's water. You can't drill on it. But winter drilling is possible. It just needs to be organized. And the one thing that we're investigating right now, the team's up at site currently, is there's not been winter drilling at the camp for at least 10 years. And can the camp be accommodated and got ready for sort of a March-ish, April-ish start in next year? If that's possible, then winter drilling is going to be part of our next year's plan. And if it's not, it will certainly come the year thereafter. In terms of resource and exploration and targeting methodology, you can see the picture on the right. On the very bottom is the gray. The purple is the historical resource of 43 million pounds. You can see in sort of the hot red, those are some of the existing targets around the existing resource, both on trend and a little offset. Things like hot, pulse, the ML. You can see all those targets. And really what's been done historically, VLF, EM, stands for very low frequency electromagnetics. So that was flown over the zone. And what it does is it lights up conductors, although not all conductors are necessarily have uranium in them, followed up by some soil work, some soil sampling, an enzyme leach. And where the two overlap, that has traditionally been where the uranium has been found. And so when you layer those two together, that's how you find the existing resource. One of the existing goals, but soils have to be done by hand, obviously. And when we go fast forward, you can see on the left-hand side is LAC 50 trend. On the right-hand side, you can see some of the lakes, and there's no drill holes to the east of that. And right below it, it lines up in terms of the physical geography. You can see those little black dots are all the soil samples, and they have to be done sort of by hand, which is fine, but it's time-consuming and costly. And one of the things that we just announced is the radiometric survey. And what this has done is it's really identified new targets both within the LAC 50 trend and outside the LAC 50 trend. And secondly, what it's done is it's made soil sampling required to identify the targets significantly reduced, and we'll be able to focus in on those targets. So while the team's implementing the existing drill program this year, we'll be following up some of these targets primarily within the LAC 50 trend, just to see what's going on, and maybe we've got some new drill targets there. In terms of the shape of the ore body, again, this is looking sort of down through the surface. Starts at surface, goes down 300 meters or so. A couple of faults in the middle, but basically what you can see is it's basically subvertical. And although grade is important, things that people need to consider for economics when you put this into production, the ore body orientation, the fact that it's structurally controlled, effectively what this really is it's a on average 2 meter wide narrow vein mine. And there's lots of analogies across the world of how what the capex and opex for something like that looks like. One thing that we're going to follow up with later on this year is Valor did an interesting ore sorting study done by Tomra, who is fairly active in doing ore sorting machinery. And you see the graph on the left. They have two interesting data points. And if these are at all true, it's going to really augur well for the economics. It's saying, if you can get rid of, or the machine can get rid of 51% of the waste, it only loses 3% of the ore, or 3.3% of the ore. That effectively doubles your head grade to the mill. That's very economic. And carrying it to its extension, you can reject 84% of the waste and only lose 6% of the ore. And so, there's a lot of trade-off studies to be done there. This was done at a bench scale. We have to see whether it can be done at a little bit more of a commercial scale. So this is on our radar to look into over the next 12 months. Initial excellent metallurgy in terms of you can see the leach kinetics on the bottom left. You get over 95% uranium recovery in 48 hours in the leach cycle. It's 70% uranium, and you can see all of the impurity analysis on the right hand side in that big chart. It doesn't hit any of them, so there's no penalties. So I get more metallurgy work to do, but at least the initial metallurgy work is quite favorable. And finishing up in terms of, there's potential CO2 capture credits in the leaching process. And as we've looked at it now, only the alkaline leach reagents are recycled, and only lime and sodium hydroxide are consumed in the leach process to date. So all of this, as we continue along the metallurgy curve to follow up on. I'll pause there. Okay, should we move on to the CMB, Central Mineral Belt in Labrador? You can see the land position. It's in sort of central Labrador. The property has never been under the same corporate ownership. Angilak and Morin Lake were under different ownership. Mustang Lake was under different ownership. It really is quite large. It's about 125 kilometers long. You can see there in the picture. Both Morin Lake and Angilak have some existing resources. And you can see the Michelin project, which is owned by Paladin at 127 million pounds, is just snug in there between Mustang Lake and Angilak. And what we're doing here this year, we're going to be doing an airborne gravity survey. It should start later this month. Cost will be around $3 million. And you can see all the property in yellow. That's where we're going to hit. The small little outline in the middle is the Paladin ground, which obviously we do not own. And what we're looking at here in terms of the survey is, it's an unprecedented look at the property in its totality. Obviously, looking for uranium where there hasn't been any, and the team's fairly bullish that this is a part of the world. It's a geological setting where the iron or copper gold, iron oxide copper gold IOCG potential is there, and if it is, the gravity will show it or should show it, and we'll see what produces from that. And again, we'll take all this, given it's such a large property, we're having to rely on certain tools that are a little newer in terms of machine learning and AI. Again, we'll take all this data along with all the other data and help us to identify targets. Just like in Nunavut, exploration here is fairly difficult. It's remote. It's helicopter air assisted, so it's reasonably expensive. You can't just send somebody on an ATV with a GPS in their back pocket. You have to be fairly thoughtful about how you approach this stuff. The other thing we're doing to fill out the budget of $4 million is we're doing some geophysics at Mustang Lake. You can see the property in the outline there. You can see it in the purple where it is physically. And the survey has been done. It has not been interpreted. We should get that back in the next month or so, next few weeks. The team's up at site, so they're focused on the Angilak drill program. So that interpretation should be coming shortly. The purpose of it is really to look at and follow up where some new targets might be in terms of it's on trend from Michelin, and just following up to see what potential interesting drill targets to add resources at Mustang Lake. In terms of summary, again, $12 million work program for this year, fully funded, cash is in the bank. What we're trying to accomplish at Angilak, 6,000 meters, really focused on the LAC 50 trend and really focused on resource growth. At Angilak and Morin Lake, we'll do a little bit of historic compilation work, potentially looking for drill targets for next year. And in terms of target generation at Angilak, the airborne surveys obviously help with that. We'll be following that up on the ground to ground truth that. Mustang Lake, as I said, in terms of the geophysics, and looking for additional targets. And the gravity survey is certainly going to help us there. Summarizing, in terms of we just got the Angilak project that closed a few weeks ago. We're happy to have it. It's a great project that gives us two great projects, both in Canada, one in Nunavut, one in Labrador. Two very big camps, two very big properties with a team and a board and a technical team that can fulfill it. We're cashed up, so we're starting to enter the newsy phase of the company. Drilling has started, and although the labs are a little backed up these days, we're hoping we can get those results into the lab and get them out either late this month or early next month. So that is Latitude in a nutshell.
Great. Thank you very much, John. Great presentation. So we're now going to kick off the Q&A portion of the webinar. So a reminder to everybody on the line that you can type your questions into the chat box, and we will get to as many as we can. So, John, we've already got some questions, but I guess first off, congratulations on the recent acquisition of Angilak. That's a project I've liked for a long time. Once it was inside Kaminak, before Kivalliq and Valour Metals, long before you guys picked it up. So, congratulations.
Yeah, thank you.
So the company did change its name to Latitude, from Labrador to reflect your broader focus now. And you kicked off the presentation with Angilak. Would this be your new flagship project?
It really is, Dave, because it's when you look at given going forward, we're going to have fixed resources. The bang for your buck at Angilak in terms of what we can produce in terms of resource growth is going to we'll see what the survey shows in Labrador. If there's something very interesting, we're going to obviously follow that up. But in terms of just a systemic project generation in terms of resource growth, bang for the buck at Angilak is less risky and better reward in terms of shareholder value in the short term.
Yeah, so you're looking to grow this thing. So in the past, Valour grew resources fairly quickly in the early days. Over the last several years, they sort of looked for new discoveries with future resource estimates. Are you considering changing that strategy a little bit? Are you going to focus more on growing Waxenconte deposit itself and less on grassroots exploration across this 40-kilometer trend?
Yeah, David. As I said, although the property is extremely prospective, I mean, there's lots of great holes with great intercepts all over the place. It's 40 kilometers by 20 kilometers, and it's not easy to get around there. So we have to be, I think by being a little bit more focused and trying to grow the resource, I think it gives investors something tangible that hopefully we're going to be rewarded both for increasing the resources and the valuation per pound that investors are going to attribute to those pounds.
Mm-hmm. And that LAC 50 deposit, this is a Beaver Lodge style deposit. They produced about 44 million pounds or just outside the Athabasca Basin. These veins often go deep. They're on major structures. You have resources down to, I think it's 300 meters or so, but nice hits down 400, 500 meters. Do you have any desire to follow some of these down dip or down high-grade plunges, or do you plan to really focus along trends and extend resources laterally, more shallow?
Yeah, that's the current discussion within the company at the moment. From a mining perspective, from an economic perspective, chances are your most economic ounces or pounds are within the first 300 meters. So you have to balance that with, as you say, this is we have every indication that these go deeper than 400 meters and probably much further. So we're debating that. I would guess that probably a majority of the split's going to be on trend within the first 300 meters. But I think we will do some follow up next year for maybe a little bit deeper holes.
Yeah. I'm not sure if some of those trends are pretty high grade as they go vertical, and these vertical deposits do lend themselves to long hole stoping quite nicely. So. Okay. Are you planning on any of that sort of development work at this stage? Looking underground and how you might mine it, perhaps a little bit more met work. You mentioned ore sorting, in prep for future economic studies?
the short answer is yes, but we don't want to get unfocused from the resource growth. Our main goal has to be resource growth. A lot of people still have in their minds that a resource has to be 100 million pounds before you start seriously considering putting it into production, and that's fine. I think with our grade, maybe it can be a little less than that, but I think we don't want to get too unfocused on some of the economic studies at this point. We want to try and, again, 80 to 90% of our work and focus has to be on growing that resource. We're not going to get to 100 million pounds tomorrow, but that is the goalpost.
Mm-hmm. And you mentioned that grade. That's your average grade is 0.7%, which is the second highest grade outside the Athabasca Basin in Canada. So,
yes.
Do you have any idea when you might want to put a technical study around this?
Well, I think
I should say more of an economic study.
Not so much economic, but I mean the short term is we're going to do the drilling this year. We're going to have a little bit more of a substantive program for next year and update the resource at the end of next year, or at the end of next year's drill program. And then we'll see what we get in terms of growth, and then we'll evaluate what kind of, if we want to put some economic parameters around something like a PEA, or if that's see, the problem with a PEA, the good thing about a PEA is it gives you the sense of the economics. The bad thing about a PEA is there's a perception that once you do a PEA that the upside's all capped, or there is no upside. And so again, we're having the internal debate about that. But we've got 12 months to land on the answer.
Right. And you are in the far north, and you mentioned a 6-month field season right off the top. Does this mean you need to do all your drilling in the summer months, or is there any chance to do anything in the winter?
Well, you can drill in the winter. You just have to be prepared for it. You need a little bit of permitting, but that's not an issue. It's more getting the camp ready to go. That it's pretty cold there. It's -20, -30, so the camp's got to be prepped for it, and people have to be, the supplies have to be there. It just needs a little bit of preparatory work. We have to start doing that preparatory work in September, October for March, April, or else you just won't be able to get there.
Right. Okay. And ESG, certainly important. You touched on NTI a little bit, but we do have a question here. Is there any way that you can get out of NTI and then Latitude together to create an MOU showing that NTI is supportive of Latitude, that they're a supportive partner? I think, and this is coming from the viewer, a big misconception and rumors why people don't buy shares in Latitude is because of false rumors that none of it is not supporting the company.
Well, that's just not true. I mean, we have an agreement with NTI today signed, and so it's a little bit better than an MOU. And what it is it's not quite an impact benefits agreement, but it's, when you look at what's in it, it's 70% of what is in a typical impact benefits agreement. It spells out what we must do. It spells out what they must do. It spells out the royalty, timelines, all that sort of stuff. So it's, the same agreement that we have. The great thing about NTI is the agreement that Latitude, the little old Latitude has. It's the same agreement that Agnico has. It's the same agreement that anyone's going to have in the territory. So from that perspective, it's quite good. And I'm wondering, maybe the viewer is there's also a misconception, I think, a little bit about Kigavik. Kigavik is a mine primarily owned by Arrivo or Orano now. It's just a little bit north of us, and they applied in 2015 for a permit to mine, and they didn't get it. And people naturally think, or if they don't look at the details too much, they think that it's not uranium friendly and none of it. The NTI is publicly stated. You can go to the website and look. They're pro mining, and the reason everyone can look for their own. The reason that Kigavik was not granted the permit is they tried to not have a start date or a development timeline, because at the time, uranium was $35 to $40, and they basically said in their final submission, at these prices, we can't give you a start date because it's not an economic proposition. So, but conversely, the local communities and the government said, well, if you can't give us a start date, we can't give you a permit and just leave it hanging there for 10, 20 years. It doesn't work. So when you're ready, come back and apply again. So it wasn't anything about anti-uranium. It was the fact that they didn't. They either didn't want to or couldn't provide a start date and a development timeline.
Exactly. They couldn't provide the timeline, therefore they didn't get their permits.
Right.
And Kigavik is the largest Canadian uranium project outside of the Athabasca Basin, and it's not too far from here.
No.
So let's move on now out of Nunavut and into Labrador. Have your
Yes.
priorities changed at all in Labrador? You know, obviously you do have some resources there, but otherwise your Central Mineral Belt projects are fairly early stage, and it's likely all about exploration.
Yep, exactly. I mean, one of the questions in the chat room is the cost of the airborne at Mustang Lake. That's around $750,000, and again, the survey is around $3 million, and again, our total budget's around $400,000. So a little bit of overheads and people cost in there. That's the breakdown of the $4 million budget for this year. That the million's been spent. The $3 million is going to be spent later this month on the survey.
That's the ground geophysics survey at Mustang Lake.
At Mustang, yeah.
Okay.
And again, we should the results of that should be out in early August, sometime. So
okay, yeah. No, thanks for pointing that out, because that was a question. So
yeah.
I guess, how do you break down your initial thoughts of the Central Mineral Belt? You know, how do you spend your budget? Resource delineation versus resource expansion versus testing new targets versus creating new targets.
Well, if it's going to be if it's in uranium, it's going to be most economic if it's going to be around the existing historical resources. So Anna Lake, Morin Lake, and or Mustang Lake. To the extent that the ground survey points out some IOCG potential, that can be self-standing and wherever it is, and we can follow that up. And again, because the property is so large, what we're doing in terms of the machine learning, there's all this various data. Some of it's electronic, some of it's from the 60s. It's got to be sort of manually inputted, or the guys have developed a program to sort of take it from its hard copy and translate it into automatically into the code, and really it's interesting. Again, we don't have the luxury of sending somebody out there in an ATV with a GPS in their pocket. This is helicopter assisted, and it's rough terrain, so we have to turn to techniques like that to help us narrow in on where we should be spending our time.
Mm-hmm. And in the Central Mineral Belt, again, you I guess, can you maybe talk a little bit more about what you plan to achieve combining this historical data, from multiple parties, and especially using that machine learning and AI? How does this differ from exploration 5-10 years ago?
Well, it's obviously computer driven. It's data driven. So you have to start with good data, because if garbage in, garbage out. And you're assembling all the data, and you're sort of it's a little bit user driven in terms of what you toggle on and toggle off. But the good part of it is we know the existing resources at the three properties: Anna Lake, Mustang, and Morin, and so we can use the data, do it blindly, and see if it lines up with what we already know. And so we can sort of have a little bit of internal validation that way. And again, the goal is to really focus down on where we should be looking. If it is around the historical resources, that's great. If it's not, then it's got to be something that can have something of size that can make something economic at some point, as opposed to just something that's just a random occurrence in the middle of nowhere.
Mm-hmm. Okay. And I guess, are you specifically searching for non-uranium targets at all in the trend? Or maybe if there's something obvious, would you go for it?
Well, only because the team is so excited about this IOCG potential, because we've concluded that it's the right geological setting, and given that we're going to do the survey anyway for uranium, it's not an expensive add-on to look for the IOCG, to look for the ground. So not a big deal cost-wise.
Right. Okay. So the big deposit in Labrador is Michelin. It's about, I think, 110 million pounds or so. Obviously a type of deposit you would be searching for. I guess, without speaking for Paladin, do you know what they're doing with the Michelin project these days?
We talk to them from time to time. I don't think we know very much more than anyone else knows. I think anyone who's up to speed on what Paladin's been doing, Langer Heinrich is coming back into production. It's going to be soon. Their next development project, if you look at their corporate presentation, seems to be Michelin. So we'll see what that means for the area and for the development in the area, because it is remote. They're going to need to build a road and things like that. So we're in discussions with them, but they haven't been back in the area in a material way for a couple of years.
Yeah, it's been a long time since I've been on site there, probably even 12 years or so. Yeah. I guess, are you guys spending much time trying to find or define vanadium at the moment?
Only to the extent that it's associated with, or it has been traditionally associated with the historical resources. But on its own, searching for it on its own, no.
Okay, great. Well, John, let's maybe wrap it up with one more question. You do have aggressive exploration plan for the Central Mineral Belt. How much cash do you have now, and how long do you think it will last? And I guess that sort of spills over both projects.
Right. So overall, we've got 15 million in cash. The two programs together are 12. We spent a little bit of that. So if you sort of pro forma it, we have $3 or $4 million left over. That'll easily last us to the end of the year. I mean, will we need to raise some more money at some point? Yes. For next season's drill program. Yeah. But we're fully funded for this year, so no issues that way.
Perfect. Okay. Well, John Jentz from Latitude Uranium, thank you very much for joining us today.
Yep. Thanks, Dave.
Thank you, everybody else, for tuning in here. Red Cloud Securities will be back next Tuesday afternoon. We're going to have a special webinar at that time that I think most people should be interested in. That's Matt Watson of Precious Metals Commodity Management. He will be discussing the critical minerals in the clean energy transition at that time. So join us Tuesday, July 18th at noon Eastern. So remember that time as well. Not 2 in the afternoon, but at noon. So have a great day, everyone. Thank you very much.